Now, Washington Mornings on the Mall.
105.9 FM.
At AM 630.
WMAL.
737, Brian Wilson, Brian Neiman. You're listening to Brian and Brian on WMAL, where Washington comes to talk. Standing by on the phone line is our good friend STUART VARNEY from the Fox Business Network. STUART, I want to start off by talking about the thing that everybody shares. They have to share a little pain when they go to the gas pumps and they pump that $4 a gallon gas. Some people say it could go up even higher than it is right now. How is that impacting the economy, and what is the long-term impact of this?
Okay, news of the day, Brian. We're up another penny overnight. The national average has reached just a tenth of a cent shy of $3.94. Now, it's surprising because the underlying price of crude oil has come down recently, and I thought that might be reflected in an easing up on the price surge in gas, but apparently that has not happened. It could be because we're switching to the summer blend of gasoline, and of course the weather's been pretty good, so we're driving a lot. That could be the reason why we're still going up for gas prices. As for effect on the economy, so far the effect has been to dramatically reduce our savings rate. What used to go into savings is now going to the gas pump, and that's a big deal, actually. And also, we have really switched our habits. We're buying gas-powered, very small cars in large numbers.
Let me ask you, have we seen the impact that often comes when gas prices go up, that other goods and services go up because it takes more to deliver them?
Well, food and grocery prices were already rising before gas was going up. So whether the gas price hike is a part of the food price hike, that's a debatable point. But so far, the impact of higher gas prices has not been felt that much in the general economy, other than saving less, buying more small cars.
All right, I want to switch topics if I can. The Dallas Fed put out a report the other day that I think some people in the Occupy movement would like, and maybe a lot of people in the Tea Party movement would like. And they're saying that the too-big-to-fail banks need to be broken up, that they've gotten too big, and it needs to happen now because the big fall is going to come, and we will still be too big to fail. In fact, we're too bigger to fail now than we were in 2008. I'm just curious to get your take on that report from the Dallas Fed, which, by the way, if I'm not mistaken, is one of the more conservative Federal Reserve branches, right?
You're right on all counts, Brian. I find it strange that I should be agreeing with the Occupy movement, right, but in this case I do. I don't like banks that are indeed too big to fail, because there will be another crisis at some point in the future, and I don't want to see the Federal Reserve printing $10 trillion to bail them out. What we've got in place of breaking up the banks is this is financial reform, Dodd-Frank. And that's just a massive bureaucracy placed on top of all financial institutions to regulate them some more. I don't think that's going to work. I think the basic problem is the size of the banks, not what they get up to. If you reduce the size of the banks, I think you solve the problem without the big new bureaucracy and all this legislation.
Well, how can you do that? I mean, the whole problem with 2008, and what I remember, is that, hey, okay, the banks needed to be bailed out. You had obviously had a big debate about that. I sided with TARP. I thought it was necessary. But the bottom line is Bank of America got bigger. Citi got bigger. These banks are all bigger than they were in 2008.
I don't know how you cut them down to size legislatively, but regulatory-wise, you could force them to separate out any trading operation whatsoever. And you could make banks what they always used to be, that is, takers of deposits, issuers of loans, and keep them within a given size. Again, legislatively, constitutionally, I'm not quite sure how you do that, but I'm sure a way could be found, and I favor it. Break them up before it's too late.
Do you think there's any appetite for that at this moment, or will there be next year once the election is settled?
That's a tough call, Brian. I think in the popular opinion, I think there's some support for that, so considerable support for that. Banks have not been popular these past 4 years, and to break them up, I think, might be a popular political move. Whether you could get it through a Congress, that's another story entirely, because the money would be flowing like crazy to stop that.
The Fed, basically, when we start looking at the notes of the Federal Reserve's meetings, we found out that they're not inclined to do more stimulus of the monetary system. And when that happened, the Dow fell. It fell 125 points yesterday. It's just hovering above the 13,000 mark again. If it continues to fall, do you think the Fed might reconsider that? And is that a good idea?
I don't think it's a good idea. I think crunch time has come. We've had 4 years of stimulus, whether it's printing money or keeping interest rates low or a combination of both. That's what we've had for 4 years. Trillions of dollars have been invested in this, and you still only got 2% growth. That policy has only worked to a limited degree to stop an absolute financial rout. So what do we do in the future? I don't think we do more of the same. I'm not sure what the answer is. I think, frankly, the answer is more political than Federal Reserve. But I don't see an appetite for continuing printing of money and stimulus from the Federal Reserve. I think the central banks have said, we've done all we can. Now it's you politicians who've got to lead the way.
All right, but if the politicians don't lead and the Fed doesn't do that, and I sort of agree with you about that, but what will be the outcome?
Yeah, well, the outcome will be...
Grim?
Grim, yes. Flat out grim. Because we got to get our fiscal house in order. We show no sign of being able to do it. We're continuing to run trillion-dollar deficits each and every year, and we've still only got 2%, 2.5% growth. That's not good enough. If we spiral down from here, crunch time happens, and we're in a big mess.
Yeah. All right. Jobs numbers come out on Friday. The ADP number this week wasn't too bad. What are you expecting? What's the word on the street? Or what is the number that they're hoping for on Friday tomorrow?
Well, the expectation is we continue at 8.3% unemployment, 200,000 new jobs created in the month. I tell you, one thing that fascinated me that I read this morning from the Bureau of Labor Statistics, 65% of the 400,000 and odd jobs that we've created so far this year, 2 out of 3 of those jobs went to seniors.
Really?
To people 55 and older.
Wow.
And that's never happened before.
Well, that means they feel like they can't retire. They need to continue to work, or they maybe had to get back into the job market.